Hi, I'm Josh Weszka from Vision Wealth Partners. Today's video is focused on capital gains taxes that the investor can be faced with. By the end of this segment, my hope is that you have a solid understanding of how capital gains taxes can impact portfolio returns and overall financial planning decisions. For many investors, capital gains tax is among the more confusing financial topics. Yet a basic understanding of the capital gains is key to building a financial plan that reflects your goals and needs. It is important to be aware of the tax consequences of selling your assets, as doing so may significantly affect your tax return and your financial picture as a whole. What is a capital asset? Almost anything you own for personal or investment purposes may be considered a capital asset. This applies to a range of assets, including investment vehicles such as stocks and bonds, real estate, and collectibles. Capital gains resulting from the sale of these assets may be subject to capital gains tax. What is capital gain? When a capital asset is sold, the difference between the adjusted purchase price, aka the cost basis of the asset, and the amount for which it is sold is a capital gain or a capital loss. You incur a capital gain if you sell an asset for more than its basis. A capital gain is classified as short-term if you've held the asset for 1 year or less before selling it. It is considered long-term if you've held the asset for more than 1 year. How are capital gains taxed? Short-term capital gains are taxed at ordinary income tax rates, but long-term capital gains are taxed at lower rates. The Tax Cut and Jobs Act of 2017 retained the existing long-term capital gains rate of 0%, 15%, and 20%. The rate at which you are taxed in 2024 will depend on your taxable income. 0% applies to individuals with taxable income of no more than $47,025 and $94,050 for married couples filing jointly. 15% applies to individuals with taxable income between $47,025 and $518,900, and between $94,050 and $583,750 for married couples filing jointly. And finally, 20% applies to individuals with taxable income greater than $518,900 and greater than $583,750 for married filing jointly. Please note, an additional 3.8% Medicare contribution tax on unearned income applies to taxpayers with modified adjusted gross income above a $200,000 threshold, $250,000 for married filing jointly, and $125,000 for married filing separately. The tax applies to net investment income, which includes capital gains and qualified dividends, or the amount by which the taxpayer's modified adjusted gross income exceeds the threshold, whichever is less. Also keep in mind that those brackets for those thresholds for 0, 15, and 20 are subject to change each year, year over year. Keep in mind that different types of capital gains are taxed at different rates, typically depending on which asset class from which the gain was incurred. Collectibles. Long-term capital gains on collectibles are taxed at a maximum 28% rate, and short-term gains on collectibles are taxed at ordinary income. Items such as coins, stamps, gems, antiques, and fine art are considered collectibles. Real estate. Special exemptions apply to capital gains on real estate. If you are thinking about selling your primary home, you may qualify for a tax exclusion if you meet certain criteria. If you hold a rental property for more than 1 year, the gain attributable to the depreciation is generally taxed at a maximum 25%. Business assets. Gains on fixed assets that are used for your business, such as furniture and machinery, are taxed as ordinary income. Remember, your capital gains tax rate depends on a variety of factors, including your level of income, when you bought and sold the asset, and changes to the tax code. We can assist you and your tax advisor in creating and implementing a comprehensive tax plan that is consistent with your financial goals and personal situation. Thank you for joining me in today's video. For more videos on a variety of wealth management topics, head to our YouTube channel. Thanks for watching. I'm Josh Weszka from Vision Wealth, your dedicated wealth management partner.